So a lot of this gold, I think, went out. And of course, where's it gone? Can it actually come back? I mean, the answer, I think, is that most of it probably doesn't. Most of it's probably gone into interest, if you like, in Asia. Yes, it's still happening. There's quite a lot of confusion, actually, over what's happening. I mean, for example, quite a lot of people within the bullion bank system see gold coming back into the UK vaults. Now, I don't think that's quite right, because really the problem I think that the bullion banks had was that when Trump threatened 25% tariffs across the board, when he first got elected, they sort of thought, well, if gold is going to cost 25% more in America, we have got deliveries which we have got to make. We don't have the gold necessarily to cover it. And not only that, but we're going to have future deliveries. So you can see why there was this panic, if you like, to move over. And the one thing that nobody seems to watch are the stands for delivery. I mean, they are absolutely huge. The rate at which they're running this year so far is roughly 1,500 tons for the whole year, if you extrapolate what's happened so far into the whole year. And I mean, that's a lot of gold. And something like 850 tons, something like that, was what moved over, if you like, into COMEX from London, Switzerland, and also places like Mumbai, believe it or not. I mean, so the arbitrage opportunity was so great. The problem is that we don't know who is actually standing for delivery. And gradually, as the stands for delivery occur, a lot of those people who stand for delivery withdraw it from the COMEX warehouse system. And that is now what we're beginning to see, because the level of stocks within COMEX warehouses is now beginning to decline. It's still very high, but it's beginning to decline. And this was something that happened after the spike. If you remember, at the time of COVID, later on that year, there was a similar situation where you had a spike, if you like, in gold going into COMEX. You had the premiums again on futures, which were driving it. And you ended up with far higher levels of gold bullion in the COMEX warehouse system. Gradually, after that happened, the level of gold in the warehouses actually diminished, and it went down and down and down until this recent spike up. And I calculated that in about the last 4 calendar years, something like 2,100 tons of gold had been stood for delivery. Now, of course, some of that may be between bullion banks. I mean, we really don't know the answer to this. But the other thing that we are seeing is that the managed money category on COMEX is having less of an influence on things. I mean, you've got a pretty low level of outstanding open interest. I mean, it's around about 417,000, which is pretty low, particularly when you see gold going up to new highs. And I think the other thing about this was that the rapid pace of gold going out of the Bank of England's vaults. Now, I mean, some of that, might have been sort of, if you like, owned without future obligations, if I can put it that way, lease obligations, as it were, by commercial entities. But I'm sure that some of the gold that went out was probably leased gold. In other words, you see, when you lease gold, it becomes your property. If you're the lessor, it becomes your property until, under the terms of the lease, you return it. I mean, it's exactly the same like you go down to the local, sort of hardware place and you lease, say, a lawnmower to do your lawn. That is your property until you return it. Obviously, you've got to return it as you picked it up. Yeah, but it's your property legally at that point. And it's exactly the same with gold. So a lot of this gold, I think, went out. And of course, where's it gone? Can it actually come back? I mean, the answer, I think, is that most of it probably doesn't. Most of it's probably gone into interest, if you like, in Asia. Central banks will have bought it and stood for delivery, I'm sure, and so on and so forth. But you've got to consider, where does that leave central banks who have been quite happy to lease their gold in the knowledge that the Bank of England was actually running things, sensibly, and leased gold wouldn't leave the storage of the Bank of England, because the way it works for the Bank of England is that they make a change in the register as to who owns what and all the rest of it, and they can issue a certificate to a commercial bank saying, yes, we store 100 tons of gold, or whatever the figure might be, of your gold, because it's been leased to you. It doesn't necessarily say it's it's leased, but at that stage it is a commercial entity's property. And from the point of view of central banks using this leasing thing to make gold work for them, get a little bit of interest to pay back the storage costs and all the rest of it, you begin to think, hold on a minute, is this a good idea? And I think on the margin, what's happening is that banks are withdrawing from leasing now, which will be creating a gradual tightening of liquidity within the paper markets. Not just London, but also knock-on effects elsewhere, because, the way London works is that London very often is long and it shorts, it has the short side on COMEX. That's the idea anyway. Now, whether it actually works like that, is an open question, because nobody tells us what their positions are. So, you can see that, if central banks don't play the leasing game anymore, then they're going to take the liquidity away from the markets upon which paper markets depend. So I think that's roughly where we are. And I think this is one reason why gold seems to be holding on to highs, despite the fact that the managed, if you like, the managed money, which are basically hedge funds, they just haven't bought it. There's some in there who have it, obviously. But the idea that they're really long, this is overbought, it's not overbought at all. It's quite extraordinary to have an oversold market, which is close to all-time highs. I think it's a reflection, if you like, of the systemic squeeze in the case of COMEX, particularly on the swaps. I don't think members of the public lease gold at all, and I don't think many institutions do. Basically, they don't possess gold. It's under-owned, if you like. So the only lessors, the only lessors in the market basically are the central banks. If they're not playing this game anymore, then the market's just losing its liquidity. The other thing is that quite a lot of gold is leased out, and it's then rehypothecated. So, if let's say you've leased it for a year or for 2 years or something like that, you don't necessarily keep it yourself. You will rehypothecate it to someone else, who may rehypothecate it to someone else. This is all part of providing liquidity in the system, if you like, in a system which really doesn't have a lot of free gold. The LBMA boasts about the level of gold in LBMA vaults and all the rest of it, but a lot of that is, in fact, most of it is actually physically owned or privately owned, the property, if you like, of people who are not leasing it at all. They're holding it for whatever reason. We don't necessarily know who they are, because if you have gold, you don't want to go shouting and telling everybody about it. Most of the gold in London vaults is really for foreign institutions, foreign high net worth individuals. What they're doing, Patrick, is they're just looking at, if you like, fiat currencies, and particularly the dollar. They're overweight dollar, and they're worried about being overweight dollar. So what the central banks have been doing is rebalancing their reserves away from fiat currencies towards gold, which is legal money. So, if you like, they see increased risk in the whole system. And you've only got to look at the debt situation. If you analyze the debt situation that America is in, that the UK is in, that France is in, that Spain's in, that Italy's in, and all the rest of it, basically, virtually all the members of the G7 are in debt traps, which basically means that the currencies are in a position where they're going to begin to destroy themselves if things go wrong. So do you really want to hold all those dollars? So central banks are tending to get out. And of course, this is being reflected in foreign holdings of US treasuries, for example. That's not really declining too much at the moment. I mean, one or two countries have been selling down their reserves. I mean, China, for example, you could argue that the reason they've been doing that is geopolitical rather than anything else. But, when the People's Bank goes out and buys gold, the way to look at it from their point of view is they're not buying gold, they're selling dollars. It's as simple as that.